Here's everything you need to know about the Asian Range Breakout report on edgeful.com. So what this report measures is the first 15-minute close outside of the Asian range. And based on that close, how often does the day follow or reverse? So let me explain exactly what that means. Let's look at this example here. I'm going to mark out I'm just going to do this quickly so we can easily see where, and I'm going to go to a 15-minute, obviously. And now we can see, okay, let me hide the New York session now. So now after the Asian range is formed, which is right here, I'm going to mark out the Asian high, right over there. I'm going to mark out the Asian low, right over here. So this is our Asian range for the rest of the day. And the rest of the day means up until right over here. Right over here. So let me mark that out. This is where our daily candle ends, right over here. And this is where our daily candle starts. So this is the price action we're looking at. Really important to note that we are referencing the daily candle, not the close of the New York session. That's why we have explicitly the daily candle here. So for futures, that's from 6 p.m. to 5 p.m. For crypto, that's from midnight to midnight. For Forex, that's from 5 p.m. to 5 p.m. And we don't have this report for stocks because stocks don't have an Asian session. So you can see now what we're doing here. We have the Asian range established, obviously. Now we're looking for the first 15-minute close outside of this range. First one is obviously this one right here. Now we fall into this category here, right over here. This is the category we fall into because it says first close above AR or Asian range. Now we're checking how often does the daily candle close red, or how often does it close green. Now you can see obviously this day here, it closed green because from the open of the daily candle to the close of the daily candle, that was obviously positive. Now, if we were to go here, let's see, right over here. So you can see here, I'm gonna move this over. Where is that? 6 p.m. Okay. So you can see this day, right over here, first candle that broke out was to the bottom side, right over here. And then you can see, very slightly, but you can see here that the daily candle is very slightly green. So that puts us here. First candle that breaks out, first candle that closes to the downside, and then 72% of the time the daily candle will be red. So in this case, this is one of the 28%. Let's actually go and look at these individual days here. So this is March 24th. Let's go to March 24th. And then you can see first close above, daily candle green. That was this day here. First close above, right over here, daily candle green. Let's go over here. Now 21. Perfect. Now you can see first close below, daily candle green. Exactly what I showed you here. First close down here, and I'll just make this green for visual purposes. First candle green, and the reason is because the close of the day was higher than the open. So this is the same, this is universally across the board. Now the way that you can use this report, I'll go back to the 6 months now, is to say if you trade multiple sessions or you put weight towards the Asian range, which I know a lot of people do, you can say, hey, if the first 15-minute close outside of the Asian range is to the downside, 72% of the time the daily candle is going to be red. That gives me a bearish bias for the rest of the day. And specifically what I mean by a bearish bias is, let me look, right over here is a good example. So we're going to mark out right here. We're going to go marking out, by the way, I'm just marking out right over here. So marking out the day that we're looking at. And you can see first candle to close outside of the range was right over here, this one here. So this is to the downside, obviously. And then now once that happens, 72% of the time the day has closed red. And obviously in this case, not exactly, but ballpark, so make it more exact. right over here. Obviously, the day has closed red here. So how do you actually use this now? Adding confluence to a bearish or bullish day, looking at the Asian range, using this report to see how often is price going to continue outside of the Asian range or reverse. This is really the way that I would look at it, to say, okay, we have this close right over here. So the downside, maybe I want to start to expect more downside continuation. Now you can use other reports like the market session breakout, market session correlation, to add confluence to these reports, where you can compare one session to the next. Market session breakout, go watch the video obviously, but this looks at how often one session will break out of the previous session. Market session correlation will say if one session closes green or red, how often does the following session close green or red? So really great report here for confluence. Here are the streaks. So you can see Asian range closed above Asian range, which would be this one here. Here are the day, 4 out of the 5 closed green. Here closed below, 3 out of the 5 closed red. So obviously you should watch this video. Well, you are watching that video actually, but on the other reports, you should watch these videos. If this was helpful, please subscribe to the YouTube. There's a ton of free information on there for you. And if you have any questions, make sure to go to the support right down here and send us a message. Thanks for watching.